Raj Bhatt, CEO and Chairman of Elara PLC based in London. Raj is joining us today on the show all the way from London. Raj, thank you very much for your time and accommodating this chat with us. We are, chatting up today at a time when, there is a bit of a growth scare which has, come to the fore as far as the global market is concerned. Let's talk about the sentiment on a global market front in your eyes, and then we'll talk about India. What's your observation?
The global view is dependent on four events, I would say. One, of course, is the growth which we're seeing because the economy is opening up. So whether this growth is going to lead to increase the earnings, or whether growth in earnings is going to be sustainable. So this is one aspect. Second is, of course, the inflation. Everybody's saying inflation is transitory or temporary, and we have to see, whether this inflation pressures will force central banks to increase interest rates. And the third aspect is how so far the economy has been propped up by the central banks, starting the Fed, which has given a lot of stimulation to the financial markets. So whether Fed or the other European Central Bank or other Bank of Japan, all these banks are going to be supportive in terms of infusing liquidity in the market. And the fourth and last, most important, that's how this whole, the dislocation of the capital market started, is about the coronavirus. So far, market is optimistic that because of the vaccine, they got hang of it, and it is going to be there for next maybe 5 years, 10 years, 20 years, who knows, coronavirus. So at some stage, I guess this event will become irrelevant. And that is the important point, because in case we see some people have this view that there could be different variant of this virus, which will not, vaccine is not going to be effective for that kind of variant. So if something like this happens, obviously we could be back to square one. So these are four events which are driving the global financial markets. And I think right now, most important event out of this four is the inflation worry. And that's anybody's guess. Everybody thinks the inflation is phenomena because we have supply bottlenecks, economy opened up, demand went up. So it is temporary and maybe 6 months, 9 months, 1 year at the most. Fed is, I think, very clear. So we have to go by Fed that this is transitory. And obviously markets had a good run. So some correction will happen. And correction is healthy because markets go in one direction, they fall very fast. So I think this is a temporary correction, and the growth is going to surprise the markets and also the earnings. So maybe could be, people can move from technology to value. There was a move from technology to value. Now from value to technology is happening right now. So these are very dynamic situation, and depending on how these four events map out, I think global markets will shape up. I personally think that markets had a good run and they will stabilize, consolidate. Maybe they can fall 5-10%, and and then after that, we will see more growth in particular sectors as opposed to entire market going up.
Right, Raj. Let's talk about the other point, which is often discussed in the market, about the timing of tapering, depending on how the US data pans out, because there were commentary that it may actually start happening in 23, but the way inflation numbers and other retail data is coming out, it appears it may happen before. Off and on, the chat is coming back on the table. What are your thoughts on taper, and by when do you think the stock markets globally would start positioning ahead of that or start factoring that in?
See, I think if you, like 2-3 months back, if you look at the US Treasury, 10-year Treasuries, which gives us a good indication of how interest rates going to move. And if you look back, about 2 months ago, there was kind of fear in the market that interest rates are going to go up, and the 10-year Treasury started moving up, and now it's back to square one again. So I think unless there is employment levels are reached at peak, growth is sustainable, I think central bankers will be aggressive. They will not increase the interest rates. And they're preparing the market to bite the bullet in case the inflation, preparing the market that interest rates are not going to go up. But it has never happened in history. So much liquidity has never been pumped into the market. So I think my guess is anybody else's guess. So everybody has a view. I personally think that central banks will continue to support the market through infusion of liquidity. At tapering, they already said they're not going to do anything to it too. I think they're going to stick to it. And whenever it happens, obviously it'll dislocate market to some extent. But again, you're talking about interest rates, where they're 0 to moving to 5.5%, which is not a lot. So I think inflation is the key here. Do we get inflation for 1 year and after that it continues, or it spirals out of control? We get 15% inflation? I doubt. I personally think the Fed whatever Fed has been maintaining, they must have done some work that they have said that inflation is temporary because supply bottlenecks, because of technology. The inflation has been falling for so many years. So I think it will continue. And we don't have the employment levels seen before. And we are going to see a lot of public spending. I mean, we see in the US has done the infrastructure bill. I think Europe and the UK will follow suit. And there will be a lot of public spending. So tapering, my view is that, we will have the taper talk on and off, but nothing is going to happen before 2023 anyway.
Right. Raj, what is your take as far as the Indian markets are concerned? They've also rallied quite a lot along with global cues. Broader markets have actually started trading at a premium to the large cap stocks, so mid caps, small caps, and there are some who say that there are parts of the smaller cap basket which are appearing frothy. What are your thoughts on purely the valuations of the Indian market?
I think there are pockets where markets is, I would say expensive, but there are pockets where the market's still cheap. I mean, we had seen a significant upward movement in PSU pack. They were grossly undervalued. I think they are still undervalued, but they are getting to the fair valuation. And we had rallies in the metals, which is justified by earnings. So you can't say that, the metal stocks, if the metal prices continue to be where they are today, I think most of the metal companies, unless they exponentially do capexes, I think most of these companies will be very lowly leveraged. From high leverage, they kind of deleveraged, basically, deleveraging going on. So we had you can justify a metal pack. About the rest is all dependent on, what the earning growth we see in the future. I mean, there are pockets where consumer side, there is this, I think you can say that it is expensive, like Zomato valuation is all optimism, in the market, what Zomato is going to do. So I think everybody has a view. I personally feel there are pockets where the market's expensive, and there are pockets where markets is evenly valued. And I think most of the low valuation we have, I think we passed that cycle. So I would say market is fairly balanced.
Right. Raj, the market correction which is playing out is also coinciding with really, big size new tech IPOs with very high, good growth runway ahead, marquee set of investors already. But at the same time, a chunk is being offered without any visibility and profitability. So the opinion is divided whether these valuations are frothy or not, at which they are being offered to retail investors. Talk to us about what do you make of this global comparisons are also being drawn for some of these consumer tech IPOs. You've seen them and have invested in them as well. What are your thoughts on the IPO market, particularly on the new tech, the consumer tech side?
See, if you look at the large technology companies in the US, when they came out with IPO, whether it's Amazon, Facebook, Google, they were all considered expensive. So as far as, Policy Bazaar or the Paytm, these companies will continue to grow. India has a huge potential. And they may be looking expensive today, and they might correct, when the market corrects. But longer term, you take 10, 15 years of view, these companies have huge potential for the growth. So I I personally feel that, they might still surprise that with the future earnings. I'm not talking about a year or two, I'm talking about 5 years, 10 years time. So I'm sure that a lot of money is going to come into these companies, and some of the valuations can be sustained. There could be temporary correction. The longer term, I am very confident that technology companies which have dominant market share will continue to surprise their earnings. And for 10 years from now, this valuation might look very cheap.
All right. So before we let you go, Raj, give us the bigger picture view, that of the short-term view. Next 2-3 years, what kind of script, in your view, could play out as far as the markets go? You've seen cycles. There are a lot of events also lined up, be it elections here in India, the state election, UP, all very important one, and then in 24, the major elections. All of that put together, what's the script which it's likely to follow?
See, there are Indian factors, there are global factors. There's one factor which is, globally we are seeing the huge impact in the ESG play. A lot of these companies which are not ESG friendly, their valuations, their prices have been falling because a lot of funds. I was sitting with one large fund manager who's from Singapore. I think he's one of the largest investors in India. And I was discussing ITC because ITC is very attractive at these current prices. And his thing was that because of ESG, you can't invest. So I think that's something we need to, we'll see in India, and we'll see higher valuations for companies which are environment friendly. You have companies like, Adani Green, Suzlon. They've all gone through a lot of churning. So I think a lot of these companies which are pro ESG, the higher valuation will be justified because a lot more new money is going to come into that. And so ESG plays important in Indian markets. So one has to see which companies are these. And then I'm very confident about the metals. I think because, it takes a long time to create. After 2007 and 8, we never saw expansion in capacities. That's the time, last time we had the super commodity cycle. If you remember that, all companies, the prices went through the roof. I think we will see one more super cycle for commodities. And super cycles, take time to build. So, there could be temporary corrections, but I think metal is one area where I'm very, very bullish. And we could see huge upside, irrespective of which government come, which election, or I'm talking about sector as per se. And then, of course, we have the consumer discretionary, like automobiles and all these sectors. Well, I think will all dependent on how the economy performs, coronavirus, global interest in India. So I think we have to wait and see. I'm bullish. I personally feel that coronavirus will surprise the market by, this third wave we were talking about. We may have a third wave, but it is not going to be as difficult as we saw the second wave. And after some time, I think people are not going to worry about the numbers, because as long as the vaccine is working, and some people die of various diseases. I think you saw that Singapore has stopped giving numbers. So I think gradually most of the countries will move to this side that this may not be that important an event. And that is an important factor for investing in India. And if you look at China, because the anti-China sentiments globally, a lot of money and investments coming to India, I think, which will continue. Our forest reserves are growing. They'll continue to grow. I wouldn't be surprised next year we talk about $1 trillion reserve, end of next year I'm talking about. So I have a lot of optimism, and irrespective of who comes to power in UP, I think optimism will continue. And this government is doing a lot of excellent work, in terms of, you've seen, what we had so many problems with PSU, NPAs, all that. I mean, this all.
All right, Raj, we'll let you go on that one. Thanks so much for joining us on the show and analyzing the environment and your thoughts on markets. With that, it's a break. On the other side of the break, we'll get you another overseas view on what's happening in the global side as far as the risk of concern is concerned. So don't go anywhere.